The recent performance of Opendoor Technologies, Open, marks a pivotal show me moment for the iBuying giant. While the headline GAAP losses look daunting, the market is increasingly focused on the operational Opendoor 2.0 strategy, which prioritizes capital efficiency over raw volume. Here is an expansion of the key drivers, financial health, and strategic roadmap for the company. 1. Q4 earnings, efficiency over volume. Opendoor's Q4 results highlighted a deliberate shift in strategy. By slimming down and moving inventory faster, the company significantly beat revenue expectations, $736 million versus $591.75 million expected. Inventory velocity. A standout metric was the reduction in stale inventory. Homes on the market for over 120 days dropped from 51% to 33% quarter over quarter. Acquisition rebound. While year over year purchases were down, the 1,706 homes purchased in Q4 represented a sharp increase from the 1,169 in Q3, signaling that the company is cautiously stepping back onto the gas. The GAAP distortion. The reported $1.1 billion net loss was largely driven by a non cash $933 million loss on extinguishing debt, rather than operational failure. This nuance is fueling the bull case that the underlying business is healthier than the surface numbers suggest. 2. Strategic capital management. To bolster its balance sheet and fund Opendoor 2.0, the company recently executed a dual pronged capital raise. Equity offered over 180.5 million shares, raising approximately $298 million. Debt issued $325 million in convertible senior notes, providing a liquidity cushion to manage existing obligations and invest in growth. 3. The roadmap to 2026. CEO Kaz Najadian has pivoted the narrative toward long term sustainability. The four-step plan aims for break even adjusted net income by late 2026. Milestone, target or metric. Q1 2026 guidance, $662 million revenue. Short term profitability, projected path to Q2 EBITDA profitability. Long term goal, positive adjusted net income by late 2026. Operational focus, unit economics, and direct to consumer relationships. 4. Institutional backing. Confidence in the new Opendoor model is being validated by significant institutional interest in early 2026. SRX Health Solutions announced a stake in January 2026. Lennar Corporation, the home building titan, reported a significant position this past Wednesday, suggesting a strategic alignment between new home construction and iBuying trade ins. The bear versus bull stance. The bears remain skeptical of the long term viability of iBuying in a volatile interest rate environment, pointing to the massive GAAP losses and year over year revenue declines. The bulls argue that the streamlined inventory, improved unit economics, and backing from players like Lennar prove that Opendoor has finally mastered the buy low, sell fast formula.
Okay, so the stock gained 7.53% yesterday, the 20th of February 2026. Yeah, volume was 132 million. It has to be one of the most active in that session. 50-day average is usually around 58 million. High beta stock. It amplifies the broader market by a factor of 3.5. So if the broader market is down 3%, it may be down by even more than 6%, or more than up to 11%. That's what it's indicating there. So this trend it showed is within a longer term bullish trend. As a matter of fact, the stock has been this trend actually began. It got a pivot as of Wednesday the 18th, Wednesday the 18th of February. So this, I don't think it is. Well, it got a picked up it got a bounce on that day on the 18th, and I think since then 1819. That's how many sessions. It was four trading sessions we had last week. So three out of four, three out of the four I had, it was up. Okay, so exporter the extrapolation is saying that we should expect a rejection. Yeah, rejection. Let's see, it's saying here by Monday we might see a rejection. Yeah, it may the strength it printed yesterday may be the day it may be rejected tomorrow. It may be rejected on Monday the 23rd, and then it's saying here that weakness may prevail up till the 3rd of March. After that, we might see a bounce that might just take it slightly above its 40-day moving average, but the moving average will serve as a primary supply line, meaning that supply meaning more shares may become available, or rather, yeah, more, yeah, by the way of selling, obviously. So all in all, we can say that consolidation is expected between from the 3rd of March going all the way towards the 30th of March. That's what is largely extrapolated here. So there's a chance that you might trade between 4.15 and 5.27. In terms of projections, we have 4.47. It's a downward projection. This pivotal, it's a pivotal projection. Yeah, it got a bounce from there. Just on when on Tuesday. I'm sorry, on Wednesday Wednesday the 18th of February. Yes. Okay, as things stand right now, momentum is expected to continue to pick up as well, and overall, it's not expected to be stable. Volatility is expected, but not as much between now and up till early April. This the 10-day moving average. Let's see whether it's appreciating or depreciating. Yeah, it's actually gaining 64 cents every day, but the derivatives are still negative. Yeah, let's see, derivatives are buying pressure is improving, and the pace is not improving. Yeah, buying pressure is improving. Obviously, it went from being negative, went from losing money to gaining money. That's the 10-day moving average. So buying pressure is there, but not as the pace is not so high. Buying pressure is there, but not very strong. Let's see what the 21-day moving average is going to indicate. We want to see if we can find any stability, some amount of stability, um, based on the 21-day moving average. Not very much, some amount. That moving average is, let's see what it's appreciating or depreciating. Okay, still losing $1.364 every day. Okay, are we gonna find any sense of stability anywhere? Let's jump to the 200-day moving average. Yes, a lot more stable. Yeah, but with its slight, yeah, a lot more stable. A lot more, by far more stable. So there's an indication that whatever it's going to happen between now and early April is not really going to be that far reaching to affect the 10-day moving average. So volatility overall is not going to be that high. May not be that high. Yeah, yeah. If it's not expected to be that high, as it's not expected to influence the 40-day moving average, the 200-day moving average that much. Okay, let's jump down to its 40, I mean, the weekly chart to see if it has anything there. No extrapolations. Yeah, but here we can take the projections. We have 7.68, a pivotal projection. Yeah. Okay, just see what you make of open stock, and thank you very much for watching this video.